Another week, another opportunity, and the first half of 2025 has come to a close. Hi everyone, welcome to Intelligent Investing. I'm April Tan, Chief Equity Strategist of COL Financial. This week, we saw a shift in market mood, from early week optimism to a cold dose of reality. We'll dive into the following: the US Fed and BSP's rate cuts, global and local inflation, US employment, and stricter e-gaming regulation. And as always, stay till the end for our stock spotlight as two companies are making moves worth noticing. But first, our market overview. The PSAI closed the week down 0.2%, finishing at 6,395.57, a disappointing end after early optimism had pushed it higher. The first half of the week, though, was driven by excitement over an early possible US rate cut in July, a view reinforced by Fed Chair Jerome Powell when he said he wasn't close to a possibility of a July rate cut. But then, with 147,000 US jobs added in June versus 110,000 expected, and the unemployment rate falling to 4.1% instead of rising to 4.3%, there might be concerns about inflation staying elevated. Because of this, the Fed is now expected to stay on hold in July, wiping out expectations of an early rate cut. The result? A Friday sell-off in local equities that erased earlier gains. Here in the Philippines, June inflation went up by 0.1% to 1.4%, still way below the BSP's 2 to 4% target. The BSP now sees room for 2 more rate cuts, potentially cutting 100 basis points total in 2025, more than earlier guidance of 75 basis points. Meanwhile, the minimum wage hike was revived as a 50 peso minimum increase for NCR is now official, effective July 18. Daily wage is now 695 pesos for non-agri workers. Although it's just a quarter of the proposed 200 peso increase, this helps balance increased purchasing power for consumers with businesses' interests as their profits would not be hit as much. Another storyline is stricter e-gaming regulations. A new bill sponsored by Senator Gatchalian proposes numerous measures to discourage Filipinos from participating in e-games. Measures include prohibiting the linking of e-wallets like GCash, stricter age verification, ad bans near schools, and a much higher 10,000 peso minimum top-up. The BSP and the DOF are also involved in this effort as they are proposing regulations to make e-gaming platforms less accessible to the mass market. The DOF also wants to impose new taxes on e-gaming operators. These rules could drastically reduce player access, especially among the lower income segment, which makes up the bulk of e-gaming players. Not surprisingly, DigiPlus dropped 48.2%, while Bloom, which just launched its Mega Fanalo e-gaming platform, fell 17.2% last week. We're downgrading Plus from buy to hold due to these headwinds. Get the full report when you log into your COL account and access your weekly notes. Anyway, speaking of stocks, let's head on over to our stock spotlight. First, we have Manila Water, who signed a 37.8 billion peso deal to acquire Wawa JVCo, which runs the Wawa Bulk Water Supply Project, supplying 518 million liters per day with room for 200 million liters more. Although Manila Water already has an agreement to buy water from Wawa, buying the company itself will make Manila Water a vertically integrated company, owning both the source of water and the distribution facilities. This is expected to lead to greater efficiency and reduce potential service interruptions because of not having enough water supply. More importantly, Manila Water does not have to return Wawa to the government when its East Zone concession ends in 2037 and is not renewed. This means that MWC can continue operating Wawa as a bulk water supplier to the next East Zone operator or to other customers, securing its relevance and revenue even in a worst-case scenario. I mean, in general, the demand grows every year, maybe 2%, 3%. If they don't have enough water, of course, we know what they do, diba? They don't have water at a certain time. And of course, the customers complain, and then you have to make igip your water, diba? The supply kasi, like right now, I think it's heavily dependent on Angat Dam, which has a capacity of, I think, 1.6 million. But the East Zone, I think, is projected to grow to 2 million liters per day, I think, or something like that. So they really need another source of supply, which Wawa provides. Next is Ayala Land, who just raised 489 million pesos by selling 12 million shares of AREIT via block sale at 40.78 pesos each. While the latest block sale increased AREIT's float by only 0.4% to 38.7%, ALI now has the flexibility to inject up to 21.1 billion pesos worth of new assets into AREIT without risking a drop in AREIT's float below the minimum requirement. This is also 16% of AREIT's current market cap, potentially setting up another major expansion round. Ayala Land naman kasi, they do have more challenges because they're into residential development. But the stock is really so cheap. If you look at its historical average PE ratios and other multiples, it's really low. And our target price is 30-40% above to where it is right now. And in a falling interest rate environment, it is viewed to be a beneficiary because that could lead to higher demand for residential properties, diba? I would say the situation is more challenging in the sense that there is an oversupply in residential. So in other words, there's an oversupply, but at least now, the lower interest rates will make the housing more affordable for potential buyers. But you still have an oversupply. The benchmark PSEI index fell by 2.5% during the first half. But many active investors did better compared to the passive investors who just followed the performance of the index. This is thanks to winners in gold mining, gaming, small banks, consumers, which delivered stronger than expected profits, and select dividend plays as they paid out more attractive cash dividends. Looking ahead, here's where opportunities lie. Consumer stocks like Monde, Pure Gold, SM, URC, and RHI should benefit from lower inflation. Smaller banks like East West and Security Bank could see higher margins because of falling interest rates. Property developers like Ayala Land, SM Prime, and RLC will ride falling mortgage rates. REITs like RCR and C-REIT and utilities like AP become more attractive as yields fall. Airlines like Cebu Pacific could benefit from a stronger peso and cheaper oil. But risks remain. A hawkish Fed could reverse bond rallies and stall the peso's recovery. And a U.S. recession could spill over into Philippine equities as it has in every past cycle. That's it for this week. From inflation trends to e-gaming risk, and from water utilities to REIT pipelines, the second half of 2025 is shaping up to reward selective, data-driven investing. If you found this market rundown helpful, don't forget to like, subscribe, and hit the bell so you're first to know what's moving the market. I'm Aprilitan. A new week is a new opportunity. Remember to stay sharp, stay selective, and as always, invest intelligently.